Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results.
So stressful when the world's on fire. Good God. I can't look at this, guys. Like, my strategy is you buy it and you hope that you got a good spot. Yeah, but we all think you're crazy. You don't fight this. No way. The markets are freaking out and you don't think that anything is wrong? Come back tomorrow and I'll lose it all. Should be fun.
Good morning. It's Friday. Quick week, I feel. Last week was a long week. This week actually kind of went by kind of quickly, despite like the long individual sessions where like nothing happened. But we've got PCE today as likely to be a monster event. I think that a lot of the action that you've been seeing this week, because some of it has just been kind of confusing. Look, the treasuries have been all over the place this week, right? It was a big down, and now we've completely retraced it. And like, why did this one go up instead of down? And I think that a lot of it is that they are very focused on the trajectory of inflation right now, that it is coming down, and they're trying to extrapolate it in the future to say like, oh, there's going to be rate cuts and yada, yada, yada. So this PCE, which is like one of the biggest components that they're looking at, is going to have a big effect on people. Probably to the upside too, by the way. They're probably going to view it dovishly, but we'll see. Here's the S&P 500, struggling a little bit this week, but at the higher end of things so far. So no harm done or anything. Maybe they could breach to new highs today, and that would be like really great for the indexes. Here's oil. Oil is on a little bit of a run now, and just remember that once we start getting above $80, it starts to become a concern again. And there is still that whole thing happening in the Red Sea. That is an inflationary risk that we have out there, right? Gold and silver still. Oh, I'm gonna move that little control out of the way. Doing okay. Silver recovering its losses from earlier in the week. Copper still holding those gains that they got after the China news. A long ways to go to wash out the bearishness from December, but the Japanese yen has just kind of been trudging along and not doing anything too interesting. But the dollar overnight has fallen back to 103. Now, we've been at 103 for a long time. But what about uranium? I mean, we could talk about uranium. I don't really... I don't follow that one. I'm very interested in uranium, actually, and I do track it. Oh my gosh, here's the news. I'm sorry. Man, I was a little bit too long-winded with that one, wasn't I? So what do we got? We got in line with expectations is what it looks like. PCE price index month over month, spot 2 versus spot 2, and year over year, 2 spot 6 versus 2 spot 6. PCE price index, spot 2 versus spot 2. US core PCE price index slightly lower than expected, 2.9 versus 3%. So that, and they did react to kind of the way I was predicting, right? They went to the upside, but it actually retraced very quickly, which has been happening a lot lately, hasn't it? Like, they retraced the news. So let's just kind of watch it. Anyways, I was going to say, I'm really interested in uranium. I just don't think that uranium tells us very much about the macro environment out there. Plus, I don't even know what the instrument name is for it. Let's see here. CME uranium. UXC? That's very interesting. Why are yields rising here? 4.13 now. Like 4.15, and then we're getting into the, oh my gosh, our rate's going to go like precipitously higher this week again. It was like, it's so funny how we've shifted, or at least I have been shifting between, oh my gosh, like this markets are getting so dovish or markets are getting so hawkish. It's just, we're kind of like, on the edge and like teetering back and forth. And you know what? I don't know if I get it, because it's a uranium doesn't show up in my instruments. Even though I would think if it's on the CME that I would get it. Maybe it's just that Ninja Trader doesn't have the instrument defined. Okay, 111.17, huh? Okay, so we're just coming into yesterday's, like, the higher end of the regular session levels. Right. So if we got below 111.03, that would be significant, a significant breakout, but a possible, that is a possible support area. So what am I missing here? Personal income month over month was spot 3 versus an expected spot 3. Real personal consumption month over month was spot 5 versus spot 3. So the only data point in all of that data there that was hawkish was real personal consumption, and basically everything else was in line. I don't know if that explains the action. Maybe CTAs are getting involved finally? Oh, okay, that's a theory. I didn't really take a look at the daily chart. I would think, though, that in order for momentum players to get involved, that they would need to be, like, breaching the range that we've built this week here, right? Like selling below 25. Just remember, these CTA strategies are very simple. It's like if it's a new high or low over a significant period. So basically, like, the way that I think of it is, the further back you need to go for that to find a higher, low, whatever. Okay, so we would have to go all the way back to December 11th to get a bigger low than 25, right? So the bigger that is, the more likely you're starting to see people trigger into momentum. And then it's also like you can look at the moving averages. Although, like, we're kind of like following the 50-day moving average pretty closely. So if we start to fail that moving average significantly, then that could be a big deal. Another one that I watch is this range. So this is the this is an ATR stop based on 3 times the ATR, because that's what CTAs tend to use, according to my book at least. But that one actually can tend to be a mean reversion signal. So do you see how it was like it went below that, and they actually closed below that at one point, causing my stop thing to flip. But then they just keep mean reverting around it. So in this situation, this mean reversion signal has been stronger. Okay, so we just had another little push. It's getting down there. I don't know. I do kind of wonder though if it's like the positioning and the dynamics of the week and everything that is creating this behavior and not some interpretation based on the news. I mean, like when it happens right there on the news release, then my first assumption, and I think the best explanation, is that it has something to do with their reading of the news. But yeah, I don't know. Maybe there's something within these numbers that I can't see in the headline that they're picking up on. That's a big thing. Rate futures traders continue to see the strongest chance of the first Fed rate cut in May, and the probability of a first rate cut in March at a little less than 50%. Interesting. Nick Timmerell's core inflation as measured by the Fed's preferred index rose 0.17% in December. As expected, this is the 6th month in the last 7 where monthly inflation has printed at an equal rate or below the Fed's 2% target. Says Nick Timmerell. So, I don't know. Let's see if Zero Hedge has a story yet. Wait, what? Biden set to announce new LNG export ban after the White House met with Gen Z climate warrior. That's a really dumb idea. Like, what if shit gets hairy in Russia again? Europe would just be so absolutely screwed, right? Oh man, that's interesting. That's interesting. Okay. Wow. Gen Z, is that a dumb? No. Okay, let's talk about Gen Z. Let's talk about Gen Z, shall we? I'm a millennial, I guess. So I guess I'm old enough now that I get to complain about the young kids and all that sort of stuff, you know? Well, you know what? There is nothing about like the behavior and trends and culture of Gen Z that really bothers me or makes me think that there's anything unique or particularly atrocious about Gen Z compared to any other generation. There's only one thing that really bothers me, and that is that they care about being the popular kid, sort of a thing. So like they're the ones getting on TikTok being like, well, why are you wearing those kinds of jeans? Those aren't in style anymore, right? Not realizing that what's in style now is basically what was in style when I was like 5 years old, right? Like, and they don't see the irony in any of this. Like they don't realize that, hey, this is all just a stupid game, and you're just giving people power over you by caring, and the real game is to just not care. Right? They don't get it. It's like everybody in Gen Z, you know what I think it is? Here's my theory. I think that Gen Z has been inundated with a far left ideology that is complaining about entrenched power structures and the wealthy. And so their whole thing is like Nepo babies. You hear people use the word Nepo babies? Did you know that like when somebody generates intergenerational wealth, that like 70% of them it's gone by one generation, and like 95% of them, it's gone by 2 generations. So there's only a handful of families worldwide that have had that generational wealth for a really, really long time. So it's almost a non-factor. The reality is that wealth doesn't stick around. But because they're so obsessed with the Nepo baby thing, they care about that clout and that style and being seen as the cool kid, because they seem to think that if they're viewed as wealthy and prestigious, that will lead them to success. When I think the reality is that doesn't effing matter. Like, just go and do something effective, man. I'm not like the greatest people person, right? I don't have a huge stream following because people love to listen to me. I mean, there's a handful of you guys that come every day and talk with me, and I'm really appreciative of that. But I think the preponderance of the evidence suggests that most people do not enjoy listening to speculators Seth every day, right? That's not why I've been successful. I've been successful because I know what I'm effing doing when it comes to like technology and so forth. When you give a platform to dumb people where they can express and argue their ideas on the same level of respect as smart people, you get a lot of trouble. But that's not, I don't think that's what happens. So those aren't the arguments that they're making. There are some people, I tell you what, there are on TikTok pushes like the communist stuff. It really bothers me. But I would say that for the most part, the kinds of conversations that I see Gen Z people having are pretty vapid. Like most kids of their age. Like, I think that most millennials were having when they were their age. Would you be able to reverse engineer a trading strategy by only having access to entries and exits and canceled orders? Okay, so you're talking about this conversation that they were saying the other day that, like, by seeing what the retail traders are doing, a combine could potentially be making money from it. And you're kind of assuming, well, but knowing the entries and exits wouldn't help you at all, right? Well, that's true. Knowing the entries and exits wouldn't help you. But if you're funding people and it's a profitable strategy, why would you need to reconstruct the strategy? That doesn't make sense. Just fund them and take 10% and it's all good, right? I think that what that person was implying was that you use the order flow and potentially I know what all of my combine traders are doing. What would we call them? People that aren't funded yet but are doing the evaluation. Maybe we could call them evaluation traders. I could look at what all of my evaluation traders are doing and potentially glean some information about the market and from that, right? Like if nothing's going on, so it's kind of an iffy thing because I don't know what the rules are around there. I kind of suspect that there would be rules against doing this sort of a thing. Okay, but if I wanted to use that information, here's how I would look at doing it. I would look at a time period where nothing's really going on, and I don't think that people should be trading. And then I see all of my retail traders going one direction and trade against that on the presumption that the market maker will have some incentive to destroy them. That's how I would play it. That's how I would potentially use that data if you were able to. Now, I think that if you were a prop firm and you were using information like that, that would be dishonest. Like, I would think that you would have to divulge that. But I think that whole conversation was a little silly. That's why I made the comment that I did there in Discord at the time, right? I was like, look, $150 a month, or even if they're paying like $99 a month, that is still a really great monthly subscription, okay? You don't need very many subscribers to make a living from that. and they get thousands of people doing this. So they make a lot of money just from the people paying to try the evaluation every month. And that is probably the majority of their money. Because as we calculated earlier this month, just based on random chance, 75% of people are likely to fail. Because of the rules that they have set up and everything, 75% of people are likely to fail. And we calculated that using Monte Carlo. Oh yeah, remember you were here when we showed that chart, weren't you? I'll pull that up again. Where did I put it? Work Python Monte Carlo. Do this one. Okay, so if your risk reward is equal, and I have it set up so that like your stops and targets are relatively small, just so that you would get like a really dense looking graph. Okay, all of these lines, each one of these lines is basically the net profits of a strategy, right? And then we ran that thousands of times. So if they get above 3,000, then they pass and they stop trading. And if they get below 2,000, they stop trading as well, right? And then we see which percent of them pass, and it was about 31%. I said 25%, didn't I? Should have said 30%. So according to our Monte Carlo simulation, if and this is not like using market data, this is just flipping a coin. Okay, there's just flipping a coin. It says 30% of people will pass. Well, no, the where the stop and the target doesn't change that number. It just kind of makes the graph look a little less cool. You get a graph more like this, right? So then you can't kind of see the swarm as well. So that's why they're small. But you can see that like the number is pretty similar. And of course, with the number of simulations that you're doing, you're gonna get a more accurate number. Yeah. But what I also did, the thing that I thought was really interesting about it was I went in and I said, well, okay, what if like, you know, your winners are much larger than your losers? Like it still comes out to like 24%. What if you're the standard retail trader and you're taking, you know, oh, that's R equals 0.5. I'm pretty sure I have one. Oh, I'd have to go and change it because I don't have one like that. I had one. Oh no, we want R is 1 is the equal risk reward. This is one where their losses are larger than their profits. This is what that one is. The high R is the 2. Yeah. Anyways, it doesn't seem to change that percentage. So that I thought was really interesting. Is that like having a low win rate, or sorry, having a low R factor, high win rate, it changes like the kurtosis of the strategy. It changes how quickly people will like blow out but it doesn't really change the pass rate, which I thought was really interesting. But that's probably because this is random. So then if we actually started using like real market data and a strategy, then you'd probably get something different. Because that's the thing that's funny, is that it's not random. Like, most people have negative edge, and I'm betting you that the pass rate for Combine is like below 10%. So it says if you just trade randomly that you have a 30%, 25 to 30% chance of passing. But I think that it probably only 10% of people actually do. So the reason why I made this, why I did that analysis was because people will say, oh, well, I passed the Combine, so that must mean that it works or that I know what I'm doing. And so I'm showing you, okay, yeah, 30% is a minority of people, but that just means like do the Combine 3 times, right? If you do the Combine like 3 to 5 times, you probably one of them you'll pass it. If it's random. Right? So passing the Combine doesn't really mean anything. That's why I made it. Okay. But to the point of the conversation that we were having, okay, if like 3 out of 4 Combine traders fail, that's good money for them. And nobody's ever like released a rundown of their profits, but I can pretty much guarantee you that the vast majority of their profits come from people trying to pass the evaluation every month. Are we seriously going to push highs next? I don't know. Well, you know, here's the thing. If we've got like, you know, relatively significant news and it's like a clear outcome, then it's pretty common if I like really zoom in. Right? Pretty common for it to do something like this and then just kind of like flatten out, right? But if it's a really big news event, like a non-farms or a FOMC meeting or something like that, it's not uncommon to see it like go down, up, and then come back down again. Or go down, up, and then breach the highs, and right? That you just create such a liquidity hole that you do retrace that no matter what, and then eventually it ends up going the way that it should. So I think that this PCE data is significant enough to create that kind of liquidity hole. So I can't really judge from what it's done what the market's actual interpretation of it is. In fact, I would maybe say that the market's positioning and all of that seems to be mattering more than like what does the data actually mean. So if you go on a Combine 10 to 15 times, you should be able to make a lot of money, right? Question mark. Well, so I don't know. The whole thing would be when you do pass the Combine, how much money do you make before you blow the account? And do you pull it out? But that's one thing that I think is interesting is if you pass a Combine and you start making money, you should take the first distribution as soon as they'll let you. I think that there's usually some rule where it's like you can make your first 1,000. And I think even some force you to take it even. But I would take it. Another thing that I find really interesting about those charts is that the people that pass, it takes them a really long time for it to do it, and the people that fail, most people fail right away. So that's another thing. So if your strategy was to pass as many combines as possible, knowing that eventually you'll blow out, but try and pull as much money from the combine as you can. The strategy of like doing a bunch of evaluations at the same time and resetting combines, paying the reset would make sense, but it would depend on how much you can make when you're actually funded before you blow. But I've seen some people claiming that they've made like millions of dollars from doing that, so maybe there is kind of just a collaboration in there that can make you money. I don't know. Because the guys that talk about doing that, they talk about doing multiple combines at once and doing the resets and those sorts of things. So just reading this story from Zero Hedge about the LNG thing. We wonder how Europe will feel about their energy security as Biden continues to pressure Putin. Of course, there's always the other side of this. There's no actual restriction at all. Currently approved LNG facilities will allow exports to double over the next few years, and this pause of new approvals is merely a headline-grabbing bone to throw to the climate kids in an effort to buy the votes? ? However, that short-term political gain comes at a long-term economic pain, as the introduction of this uncertainty will, at the margin, reduce the energy industry's willingness to invest in future supply. They have a promo where you get a $50K account for $35 a month. Well, okay, but let's just say, for the sake of argument, that you make $35 a month times and 1,000 people do it. You still made $35,000 that month. That's more than enough to pay for, a dozen employees and have a good business. Right? I'd love to make $35,000 a month, wouldn't you? I don't know why I pulled the calculator out there. I didn't need a calculator to tell you this is 35,000. How many customers a month do you think that they get? They let you have up to 20 accounts at a time. Oh yeah. Oh yeah. The thing that irks me so much is like, why not just trade micros, man? Like, if the strategy actually works, why not just trade micros and set your own risk parameters and yada yada yada. Yeah, with 20 live accounts, just go long on one and go short on the other one, and yeah. Absolutely. Which instrument can be mostly traded on the basis of technical analysis and chart patterns and is least affected by market news and government policies? None of them. None of them. Probably the one that you would have the most success with technical analysis would probably be the indexes, just because there's so much randomness involved, but they're very sensitive to economic news and so forth still. That's funny. I had a conservative comment on r/advice animals that actually did well. Somebody tried telling me that Donald Trump's stay in Mexico policy was only legal because of COVID, and that when COVID was over, that the courts shot it down. And that is not what happened. It was implemented in 2019, long before we knew that COVID existed, and it was ended by Biden in May of 2021 or whatever. So like, it was Biden that did it by executive order, not the courts. Octavia says, I see no edging in a set of my hands. I mean, it is starting to come back down here. It's certainly in an area where we could trade it, but it seems to me that the flows are the most important part here. I suppose that should have me biased towards the downside, but I can only just now see that, so I don't know if that means that there's a whole lot more selling to come, unfortunately. Anyways, it's interesting that I actually won that one. I think that maybe says something about the country's mood on the issue of immigration right now. The top story on Zero Hedge is still about how there's this battle brewing between Texas and Biden. With them, like, I keep hearing rumors that Biden's giving them an ultimatum to stop by Friday or they're going to do something. So it seems to me like people want something to happen, which is, okay. That's interesting. A little bit of a worse cough today. I hope that I'm not getting sick again. Secondary infection or something. That would really suck. Don't do it, Octavius. Your hands will go numb. Yeah, if we're going to do that in the treasury, I think you would end up sitting on your hands a lot, and over several years, I think that could potentially have negative consequences on the circulation of your hands and fingers. So perhaps you should do something different, like fold your arms or something like that. That would... Got infected by Seth through the stream. COVID has become digitally contagious. That would be weird. That would be a weird thing. Elon Musk warns Tesla workers they'll be sleeping on the production line to build its new mass market EV. Okay. Is hedge funds a dying industry? What's this? I read some articles that flow is dwindling. I'm interested if you think so. No, not anything to debate here, really. All that has happened is that it's a more competitive space, and as a consequence, 2% of assets and 20% performance is becoming increasingly rare. Yeah, the easiest way to win demand is to lower your price. So I wonder, let's say I wanted to make $150,000 a year divided by 0.015. You would need a $10 million portfolio. Okay. Still doable. Still doable. And if you just wanted to only to make $100,000, I put 150 because I feel like $100,000 is like just kind of normal for people nowadays, right? If I'm gonna go through all the stress of managing a fund, I better be making more than the average person, right? I can still do it. You can still do it. 1.5. Of course, you'd have to have an actually good strategy to attract $10 million. Interesting how all that math turns out, though. Sorry, I'll read you something, actually. So this is from a book that I've been reading. Oh wait, what am I doing? Let's see here, let me find it first. Where was it? Where was it? Okay, here he says. Okay, so he's talking about, so what should you do? Should you trade your own money or other people's money, or what's the best thing? So he's talking about trading your own money. Trading for yourself is without a doubt the most common dream among hobby traders. But I will try to convince you here that it is the wrong dream. It doesn't make sense. The first thing that you need to understand is that almost all day traders end up losing all or most of their money. The stories you hear of the social media stars, the influencers, and the gurus, it's not real life. The markets do not work that way. The stories are either made up, greatly exaggerated, or you might just hear about the gains and not the losses. Even if they were true, if such black market magic existed in the real world, using these supernatural abilities to trade for yourself still wouldn't make any sense. What it comes down to is a simple risk assessment, as illustrated by the following example. Assume for a moment that you have worked hard and saved up $100,000. And that you're now ready to start off your trading journey. You've done your research and have a solid trading strategy to deploy your hard-earned money on, ready to trade for a living. How much money do you need to live on? If you're based in Zurich, London, or New York, you probably need 6 figures to break even. But those are expensive locations. How much you need to take out of the account each year for living expenses may vary, but it's something you need to account for. With entry-level jobs in finance often paying in the low 6 figures, you would likely want to achieve this and hopefully more. The second question would be what kind of risk you need to accept from trading in order to have a shot at receiving such returns. Perhaps you decide that you need $50,000 return per year to live on from your $100,000 trading account. That's 50% and more than double of what Warren Buffett has accomplished. Does that sound realistic? Even if you somehow are sure that you can average a 50% return in the long run, which isn't very likely, your ride wouldn't be all that smooth. One year you're up 80%, the next year down 60%. It might even out to a positive number, but try telling your landlord that when your rent is due. Another issue here, say you are giving up the compounding effect. Imagine the first year starting out exactly according to plan and you actually reach your target 50%. Since you have living costs, you now withdraw $50,000 from the account, and the next year you start out with the same $100,000. You will never grow the account this way. Worse still, if the second year ends up at negative 30, you now only have $70,000 on the account. You had zero income, you can't pay your bills, and you need 70% trading gains to get your target $50,000 next year. When you trade your own money for a living, you'll be forced to take on too high risk. You'll be taking all the risk, and you will be giving up most of the upside by taking out a salary. No, take my word for it, trading your own money for a living does not make sense. I would even argue that making the decision to trade your own money for a living is in itself a bad trade, and it makes you a bad trader by definition. So that last little part there was the part that stood out to me so much. It was just like, because I've always understood this, that like, okay, like trying to turn it into like your primary living isn't a very smart idea. But the way that he put that at the end, I would argue that making the decision to trade your own money for a living is in itself a bad trade, and it makes you a bad trader by definition. That really stuck out to me. Who is saying that? His name is Klenow. What's his first name? Andreas F. Klenow. Let's see here. I think there's a little synopsis here at the end about him. Where is it? Andreas Klenow is a Swiss author, financer, and entrepreneur based in Zurich, where he is the chief investment officer of a family office. He has been a tech entrepreneur, a financial consultant, a hedge fund manager, a financial engineer, a quantitative trader, a financial advisor, a board member, and a middle management corporate bureaucrat during his illustrious career. And the book is called Following the Trend, Managed Futures Trading. So it basically explains how momentum strategies work. So he shows you a very simple momentum strategy setup and goes through the performance of it and all of this stuff. So the thing that I like about this book is not like, okay, like here's a setup and an edge and go and trade it. He puts something that he's like, you know, if I was doing this, I wouldn't actually use this strategy. Okay, but it gives us good enough results for us to analyze how this thing behaves, right? And he basically, you can tell as you're reading it that he has managed funds in this manner. So he's in a family office. That's, I think, really interesting. So basically somebody with, you know, that already has $10 million is just paying him to do the momentum strategy for him in just a family office instead of creating a fund where you have to deal with other people's money and all that sort of stuff. That's really interesting, right? But his what would we say? Argument is basically that you should trade other people's money. Let me read that part. If you want to be a professional trader, and if you have accepted that trading your own money for a living isn't the answer, then you need to look at trading other people's money for a living. You can throw in your own as well. Nothing wrong with that. Trade your own money while you're at it, but your main income will come from trading other people's money, which is kind of what I want to do. Is like save up $100,000, start a fund, $10 million or more, and 100,000 of it would be mine. That I think is the way to go, right? Don't fall into some sort of thought trap believing that it's somehow brave to trade your own money and cowardly to trade others. This is finance. We're not out to prove something to ourselves or others. We're in and out for a buck, and we don't take prisoners. This is all a numbers game, and specifically about numbers of dollars. Go back to the example of the previous section. You've done your research, you're happy with your trading strategy, and you've got $100,000 to trade. But this time, you clever up, and rather than just deploying your own money, you decide to go on a fundraising spree until you manage to raise $10 million of other people's money. That means convincing others to trust you and your trading approach and allow you to trade their money along with your own for a fee. There is, of course, the key to this little question, the word fee. You now get a basic income just from the fees, which means that you can trade more responsibly instead of aiming for unrealistic returns. Setting trading targets too high means taking too much risk, and taking too much risk means that you'll blow up sooner or later. No need for such irresponsible risks anymore, not with the fees. Let's say you get a fee structure of 1 plus 10 from your investor. That means you get a 1% management fee and just for showing up and turning on the lights. And you get to keep 10% of the profits you generate for your clients. It's a fair deal. With 10 million under management, you now get $100,000 yearly salary, taking the stress off of paying rent and feeding the dog. If you end up making a 20% gain, that's US $2 million for your customers, of which you'll get 200,000. All of that with a lower trading risk than you would be forced to take if you just traded your own cash. Throw your own money in the pile and you can make trading gains or losses on your own money at the same time. The management fee is always there, even if you have a bad year. That is not unethical. It actually works in everybody's interest. If a manager has only a performance fee, they will be incentivized to take on high risk in hopes of high pay, and they will have an incentive to simply shut down the shop after a loss rather than to try and recoup it. The really nice thing about asset management is how it scales. It's not all that much more work to manage 20 million compared to 10, but your pay is double. The industry scales well, and if you're clever, you can raise substantial amounts without having to add too much cost. If you look at this from a trading perspective, the risk and reward comparison should be clear to you. By trading for yourself, you take a very high risk for quite limited upside. In contrast, if you choose to trade other people's money, you take fairly low risk for a nearly unlimited upside potential. A good trader would make that call in a split second. Right? You can make more money, because part of the thing is what he goes into is he's like, okay, you start with you'd start with $10 million. Hold on. I'm just trying to clear my throat here. Good grief. I'm surprised that you guys are so down on it. So let me walk you through it here again, right? He's saying the way that this kind of works is like, if you have $10 million, right? You have a universe of assets, right? You have a couple dozen, or if not hundreds, of different futures instruments that you can go into, right? And when any one of those instruments start to show momentum, then you enter into them, okay? So if you just trade one instrument like what we do, then the market's not trending. And it can be years before that market trends. And so you're not going to make any money from momentum. You do it over a large number of different assets, and that's where the edge comes from. And that's how momentum funds and the majority of CTA funds out there, this is how they work, is they're trading momentum of some sort. So when a signal enters, there's a question of how much money do you put on it? And that would be a factor of how much money you have. Assets under management. Okay. And the volatility. Right? So like if I'm going to take if I'm getting momentum in the 10-year treasury, I'm going to trade more contracts than I would if I saw momentum in oil, because oil has like more leverage, right? So I say, okay, I'm going to adjust my size based on the volatility of that instrument, right? And then I'm going to put a certain amount of my money at risk. Okay, well, how much of your money do you actually put at risk? He recommends 4%, actually, is what it is. So he's saying if you had $100,000 and you wanted to make 50% on it, in order for those numbers to come out correctly, this number, you would increase this number essentially. So you're taking on more risk, which means you're going to have even more variation in your returns. So that's what he's talking about. Is he's saying if you trade other people's money and just get a really big bag, then you can reduce this amount and get more consistent returns, essentially. He's 100% right. It's a better trade to trade other people's money. And it's would be better for your mental health too, right? Lose other people's money. Well, the difference on this one is all you've ever known is day trading, retail day trading. Well, the majority of retail day traders lose everything that they put into it, right? And we don't have enough money to make a strategy like this work. In order to make a strategy like this work, you have to have a pretty big universe of instruments to trade, right? And you're going to be in positions in multiple ones at the same time, which means that you need to have a certain amount of money, right? Like if you started it with only $1,000 and then it comes in and it says, okay, you need to trade the 10-year treasury. Okay, well, how many contracts will I do? And then you do all of the math and it will come out to like 0.3 contracts. And you're like, well, that's not going to work. You know, as soon as it's less than 1, then it just makes sense. So you have to have a large enough portfolio for the position sizing to even make sense. And that's where you need to have a certain size of portfolio. Okay. But once you have a certain size of portfolio and you're not doing intraday trading, you're trading positions where you keep multiple positions across multiple assets for weeks, if not months. It's a completely different game, right? Because now you're taking advantage of time in the market beats timing the market to some extent, right? When you're trading intraday, it becomes like a zero-sum game. And how well you do is going to depend on how good you are compared to everybody else. And how good are you compared to the market maker? Not very good, right? Whereas if you can hold an asset over several days or several weeks or several months, swing traders, okay, if you like go to the swing trading subreddits, for instance, most of those people make money. Most of those people make money. They probably don't make as much money or as consistent of a return as they would if they just put it into an index fund and left it there. Okay. But they are at least profitable and they're not losing all of their money. right? Simply by changing the time frame. So if you've got a really solid back-tested strategy, okay, even if your strategy doesn't work, which is to say that the Sharpe ratio that it's giving you compared to what you would get if you put it in the market isn't very good, but you're still making money. That's still sustainable, and the fund can keep going. So you're not losing people. Well, I don't know if you're exposed to more risk. You're exposed to more time. But that's kind of the other thing is like, okay, if I only plan on being in the market for 5 minutes, then some unexpected news headline coming out is like a seriously huge risk to me, because the amount of money that I could lose from that headline is probably multiple times what I would normally make on a trade, right? Whereas if you're holding a position all year, for instance, then the risk from an unexpected headline is kind of trivial compared to how it's going to go for the whole year, right? Like, we come in here and we look at like, okay, I probably wouldn't recommend being in the market when the PCE hit, right? That can blow accounts. Okay. But when I come over to the chart and I look at a daily chart, where is my daily chart? Okay. What actually is that compared to like the behavior of the whole last year? It's nothing. It's nothing. Right? Do you understand? Once you're going to a higher time, once you get outside of the day trading time period, it's a completely different game. Completely different game. And with the momentum strategy, you know, like, what would we be doing here? We would be going short the treasuries here, and then somewhere around here we would flip and we would go long, and we'd make a little bit on the long. And you take, you know, you kind of take this, and you kind of take this, right? And you say, well, yeah, but when you do that, you know, we've done these back tests on 1 and 5 minute bars and all that sort of thing. And you're right. It's a problem. But why is that? It's because most intraday data is range bound, right? So when you go out to a higher time frame, then this momentum concept has an edge. Do you have any proof that swing traders make money from aside from what your experience from scrolling Reddit is? I don't know if we have empirical proof. But like, look, if you just put your money in an index fund and hold it for 30 years, you have a almost 95% chance of making money, right? Or another thing is, like, they've done many studies, right? And the thing that is most correlated with returns is time in the market. So by day trading, you are essentially giving up probably the greatest edge, right? So that's not to say that like day trading in and of itself is stupid. Is just that I think that this guy that's writing this book is 100% right. That what most retail hobby traders want to do, what makes the most sense is to start a fund and trade other people's money. Like, if I wanted to spend all my time on trading, all my time, I could manage a fund and have the YouTube channel. And the YouTube channel could help bring money into the fund. That's the trade that makes the most sense. Because what you can make from intraday trading is kind of limited. And I with the edges that are available to us, I don't have a way to scale that to making a complete living from it. Okay, so who would back anyone who can't prove? Well, that if you're coming in and you're day trading and you don't necessarily have a whole lot of success with day trading, that doesn't really tell you anything about the news, the managing the fund, unless you're saying that you're going to day trade and that's how you're going to make the money, right? No, that's why I'm doing research on completely different side of things. So this is the other thing that I think is really interesting is that, if I go and I take price and volume and all that sort of stuff, and I do an analysis, and I'm trying to take trades on 1 minute bars, I think out of all of that, I've found like 1 or 2 strategies that over a 5-year time period were profitable, and the Sharpe ratio still wasn't above 0.5 for intraday trading. Okay. But then I go to a higher time frame and I say, like, I'm going to look at it for like 10 years or whatever, but I'm going to trade daily bars. And now all of a sudden I can find tons of things. I still haven't gotten one with a good enough Sharpe ratio that I think it would attract a lot of capital. But what I've seen so far, like a lot of the stuff that I've been looking at translates. Actually, so that got me thinking. There's a backtest that I wanted to do. And since I am really not liking this market, it's funny that we're back down at these lows, though. But I really don't understand what's going on today at all. I do not get this. It's funny. Remember I said, well, I am seeing some downs. So look at the cumulative delta on this. This is actually really curious. Is that like when we got to here, I said, well, I think I have enough evidence to support that there's meta orders coming in short for some reason. But like, look, through this whole period through here, it wasn't doing that. So I think that then at that point, it was the volume came in the other instruments and not necessarily. So where was it? From 717. Oh, actually, they all kind of went sideways. No, it was the 5-year that moved. So it was the 5-year that pulled us down. But I suppose if I had taken a trade there and I really stuck with it, I kind of suspect that some of this stuff might have frustrated me and gotten me out, but then it did trend down. So I guess that kind of reading of the flows in that particular instance worked, but that may just be luck. So I can't explain why the flows are coming in that way. I'm unsure if we should just hit the market because it can go back up. Yeah. Without knowing why it's doing what it's doing, there's no real way for me to know if it will continue or reverse or any of that. So, I want to finish reading this. Looking at just the mathematics, it's hard to find reasons not to go the professional way and trade other people's money. The numbers are clearly there and it makes for a superior deal, but trading other people's money may not be for everyone. There are a few reasons why it might not suit you. Some say that they just want to trade and not run a business. That's fine, but it's just an explanation as to why you've decided to make a bad trade in going the solo route. Another common reason is that you don't feel comfortable with risking other people's money. Well, if you're not confident in your trading, you certainly shouldn't risk your own money on it either. A third reason in the same category would be that you don't want to deal with a client relationship in sales. Again, that's just a reason for making a bad economic call. On the more valid side, you might object that you simply don't know investors and would have no idea how to raise 10 million. That's me. Right. How would I raise $10 million? Well, that's not easy, but it can be done. It means learning new skills, getting to know the right people, and working hard. Difficult, but not impossible. Okay, cool. Doesn't tell me anything about how I actually do it, but cool. Regulations are important. That's also a valid obstacle. Some jurisdictions are rougher and more expensive than others, and you really do need to read up about your local rules and regulatory bodies before trading other people's money. Find out which regulatory body is responsible in your area, call them and find out what it takes. What you don't want to do is ignore regulations that could get you shut down real fast. Finally, a very valid reason for why some traders don't raise external money: some types of strategies rely on small pricing inefficiencies, or they trade illiquid markets. Such strategies can at times have limited capacity, and it might not be possible to trade them on a large scale. Luckily, trend following is able to scale to very large trade sizes, so that won't be a problem for you with those types of strategies. So, that's his argument for why you should become a CTA. And by the way, the strategy that he shows you in the book is literally like, if the close of the day is above is the high of the last 30 days, and the 50-day moving average is above the 100-day moving average or something like that. Like, that's the trigger into the strategy that he shows. And then he shows like the long run performance of it. Where is that? I have to go to the end of that chapter. Like a third of the book is just taking you year by year and showing you how it works, to show you what it's really like to manage a fund like that. There we go. There's the performance of the strategy. Performance after fees versus the S&P 500 return. So he shows you a strategy where over 20 years, it handily beats the market. Very simple rules. So that's pretty significant, isn't it? It kind of explains, like, oh, okay, now I can see how professional traders make their money. Why did they do it? And well, they're doing a completely different thing that doesn't really apply to what we're doing. They're playing a completely different game. Seems like a better game to play, though, if you want to make it your living. So, I wanted to do a back test. So I had this strategy. Where is it? I didn't pull over all of my strategies from my old computer. I just kind of left them in a place because I didn't want to keep all of the clutter, you know? NinjaTrader 8, bin, custom, strategies. So I think I have one that was like daily. Ultimate filter day. I think that it's this one. Let's see here. Multi-Bollinger. Yeah. Oh, so I have this all set up to work on both intraday and daily bars, I think. So it's just trying to trade based off of a moving average, and I wanted to see what worked better on daily bars. So, what's R2 daily? Yeah, okay. I can look at that one separately. Now, I think that I also have one that is like oscillators. Oh, well, then I had one that was like ultimate filters. I'm pretty sure that I do somewhere. Huh. Well, okay, whatever. All right. Yeah, I think that I'm going to copy it. Ultimate filters. This right here. And just get rid of that. Yeah, okay. Include trade history and backtest. I don't know. We can probably leave that on, but I'm just going to leave it off for the heck of it. Don't need this stuff. Close above the midband if you close below the midband. But I also want to have is rising midband is falling my bands dot mid bands, which are short. And I will call this variable if actually let's pull this up here. If use slope yeah else Okay. There we go. Stop, target, mid-band, use slope. Oh, I have one. That's funny. Base period. How to become a professional coder? I don't know how to do it without going to school. Go and get a computer science degree. They are breaching some critical levels now. There might be this is a spot where you might see some support come through, but let's see. I still don't understand what's going on. Okay, I think that should be enough. Oops. WWE refs make $300,000 a year? Really? Well, how do you get that job? Oh, it comes up over here. Yeah, okay. Ultimate filters. 10. Instrument. Let's start with CN. And we're going to do 1 day. And we're going to go back to like 2016, I think, is what I can do. Don't break it end of day. Run. Okay, didn't take any dreads. Let's see here. Where is my output window? Oh, error on bar 0. Did I if current bars, oh, if current bars of 0 is less than base, then return. Okay. Oh, durr. We need to do it over here, that's why. There we go. It's editing the wrong file. Okay, cool. All right, so look at what you got here. Oh, yeah. Oh, we should just add the property, huh? Okay. There we go. Okay, so this is just using a simple moving average. It stays in the market all the time until it gets like an opposite signal. Okay. But it does okay, especially after 2020. And that's over since 2016, so that's over a pretty big time period, right? You're only winning a quarter of the time, but you make so much on your winning trades compared to your losing trades that you make money. Okay. Well, you would want to run this strategy over multiple instruments, but like the treasuries are a good one to go do because the treasuries trend so much, or at least they have. Okay, but the reason that I wanted to do this was so that I could do an optimization. And I could say, do all of these. It will take me a while to click them all. I will also do the base period from 10 to 200 days and increment by tens. And I will optimize whether you're doing it on slip or not. But I will do false to save the history so that I can do a bunch of them. And yeah, we'll run it like that. Oh, only 1,000. Yes, only in the 7-point range. Yeah, ES has kind of been like that lately, though, huh? ADX VMA. Wow. It only takes 4 trades, but it does really good. I'm concerned that that one may just be a, how would you say? So let's keep the top 100 results and do it on sharp filtered. And what is sharp filtered? Sharp filtered. Minimum trades 20. Okay, cool. That I think should give us a little bit, because otherwise you're likely to get something that's really curve fitted a little bit, right? So when I get a strategy and it's like not taking very many trades, that makes me think it's curve fitted. Okay. Well, that's weird. What was I? Oh, I was optimizing on profit factor, wasn't I? Okay, so it likes DEMA and TEMA. What are those? I should try some of these oscillators that they have too. But I'm doing filters. Okay, so ADX VMA is the average directional index, volatility moving average. Maybe I just need to go to all indicators. Is DEMA and TEMA ones that are included with NinjaTrader? It is. Oh. Oh, that's very interesting. Okay, so the EMA. Oh, that's so interesting. So they get an EMA, and then they do the EMA of the EMA. And then they do 2 times the EMA minus the EMA of the EMA. So it's basically like trying to account for the error that's introduced by an EMA. That's so effing smart. Why have I never heard of this one before? What is it called though? DEMA. Trading. Double exponential moving average. It's devised to reduce lag. So it reduces lag even more than an EMA, essentially. Okay. So then what is TEMA? TEMA is a triple exponential moving average. Oh. Okay, what's EHMA? That one maybe is not come. There's a 0 lag TEMA. Huh. $8K bet it evens. Trade continues to be short, man. I'll tell you what. Sorry, what were we looking for? EH. Oh, exponential whole moving average. Oh. Now, if I come back and I change this to max net profit instead. What does that look like? What is the one that's actually max net profit? Ending home sales. Oh, did I not? How come I didn't hear 8.3 versus 2%? How come I didn't hear that on my news squawk? Maybe they did say it and I just really was not paying attention, man. I'm going to refresh it and just redo that again. But it did crush. Oh, man. So that's why they sold there. That 8K certainly is big, isn't it? Put this back over here. Oh. Still TEMA. That's not bad. Like doing that over a large data set could be interesting. So interesting because, you know, like there always people talk about exponential moving averages and all that sort of a thing. Well, on intraday bars, exponential moving averages aren't very good. But apparently, when you're doing a CTA strategy and all of that, the sooner that you get triggered in, the better. So there's a little edge for you on our CTA strategy. Very interesting. Wow, that is big iceberg at 0.5. Kind of holding it back here. Somebody taking profits, stepping in to support it. I wonder. After a move like that, with this kind of momentum that we've had, usually icebergs don't stop it. But I mean, there's always the chance that it does. So I'm not going to say that I'm like making a bet on it or anything. But I'm still kind of like, I don't know why they're selling it. Well, maybe they're selling it because pending home sales crushed. Maybe this whole time they were taking a trade based on what the pending home sales was going to be. Because that basically means housing is going to get even more messed up if you cut interest rates, right? Entirely possible. Yeah. Oh, here's what I'm looking for. Let's read about core PCE. One of the Fed's favorite inflation indicators, core PCE deflator, tumbled to 2.9% year over year in December, the lowest since March of 2021. Headline PCE deflator rose 0.2% month over month, holding at 2.6% year over year in December. While durable goods year over year deflation continued in December, non-durable goods costs actually accelerated. Services inflation slowed modestly. But on a month-over-month basis, services costs accelerated. Okay, even more focus from the Fed's perspective is services inflation ex shelter, and the PCE equivalent shows that it has broken down from its sticky levels to the lowest since March of 2021. But we did see a spot 3% month-over-month jump, considerably bigger than the last few months' increases. Under the hood, Supercore PCE inflation indicators are all ticking back higher month over month. Income and spending both rose month over month in December, but spending significantly outpaced incomes. Income spot 3% month over month, spending jumped spot 7. Spending is up 5.7 year over year, way ahead of income growth and only 4.7. While wage growth overall was modest, it is government wage growth that is driving it, now at a record high. And on the back of that, the savings rate tumbled from 4.1% of DPI to 3.7%. Does that seem like a good thing? The average savings rate tumbled. That is not a good thing. Finally, while the markets are exuberant at the disinflation and the coming Fed rate cut avalanche, we do note that it's not all sunshine and unicorns. The vast majority of the reduction in inflation has been, quote, cyclical. Okay, so both cyclical and acyclical are coming down, but it is definitely the cyclical that, you know, was kind of adding to the inflation and that has come off. And so there absolutely should still be concern that acyclical inflation could remain high and keep the longer run inflation rate at 3% instead of 2%. is the apolitical Fed really going to cut rates by 140 basis points next year with a background of strong growth and still high acyclical inflation? Obviously, Zero Hedge thinks no. So, that's interesting. So, I can see now that we've gotten kind of a better analysis of the report, I can see how that particular news could be interpreted negatively by the market. There was that new home sales number, and that came in, and that was also a hawkish number. Now we're still only at 416. Are we really all the way down here at one point? Yeah. So if I had traded, because I think that at one point I was thinking about 415, but when we were up here at 7 o'clock, we must have been further down. So I probably could have made a little bit off of it. Okay, and they haven't been able to get through that big iceberg yet. So with that all in mind, could we see lower today? It's definitely possible, but I think that it will be harder to find the volume now. So it may just settle here. I don't know. I feel like I'm way too prone to think that it's not going to do anything significant these days, don't you think? I'm constantly like, it doesn't matter. Let's go do something else. And then it moves without me. Still. Oh, you know what? On that, well, so I can close this. Well, we just realized something about my strategy analyzer that I had just run there. On this one, use slope false, use slope true. Do you agree? Well, what do you mean by do you agree with this trading style? It is a style of trading. It can work. It's incredibly difficult to make it work, and I think that he acknowledges that. Basically, like the hardest way to do things now. But it's also a very critical way of understanding what's going on an intraday basis and how to make money from market making. So there's some valuable stuff to learn. I think the question that you're really asking is, should I pay $10,000 or whatever to take his trading course? Right? Unless you have a really big wad of money to blow and you really want to do market making, probably not. But you don't necessarily have to buy his biggest one, right? He's got different levels and stuff. Education is a really difficult thing because I think for the most part, you can figure things out on your own and or read books and learn for a lot cheaper than most of the trading courses that are out there. And on any level, if you're doing intraday trading, you're doing day trading, no matter what you learn, you're still likely to lose money just because it's so competitive. So it's really difficult to say, like, is the education worth it or not? Because that, like, very much depends on you and what you think is worthwhile, right? Like, if the answer is, if the question is, will I become a profitable trader from taking this course? The answer is almost always no. If we're talking about intraday trading, right? So it's up to you to do with that what you will. But I think that Gary Norton definitely does know what he's talking about, and he has some very valuable insights, yes. I think that he kind of holds what he's doing a little too close to his chest. Basically, what he's doing is he's trading something based on correlated markets, right? The way that you value an asset is the value of a closely related asset. So you're doing arbitrage, right? So that's like the basic of what he's teaching, but like the practicalities of actually doing that is like a completely different thing, and he has a lot of valuable information there. So unless you have enough money to make it become an actual market. Well, the issue is that the robots are so fast, right? It's really hard to make money doing arbitrage as a retail trader now, because the computers compute it instantly. So that's and even if you weren't, it was still a hard job, right? So you really are talking of like the hardest style of trading, but it's also like kind of like the basis of the whole market. So like it's really important to understand anyways. Get what I mean? I think so. The thing that I think is really interesting about Gary Norton is the argument that he's trying to, or that I think he was trying to make. I don't know if he still does or what he thinks about it now, but I think one of the arguments that he was trying to make was that the kind of market making style of trading makes a lot of sense for the beginning retail trader. Taking a lot of trades, you get good feedback, you learn quickly, and you can trade small amounts, right? And so it's just, there's the robots, and so I wonder to what degree it was like, yes, that is what it was supposed to be, is that like if you were on the floor back in the 80s, right, you were the market makers, and the locals were the market makers, and that was their job, and you learned that thing. And then if you did well with that, then maybe you graduated on to bigger things once you had more capital. And then the robots came along, and basically as time has gone on, that edge has become more and more difficult to do. Because like honestly, like what Gary did, they don't really have positions for that really anymore. It's more like you're just supervising a robot. So robots replace the locals. But I think that Gary makes a good case that there are still some situations where because of the complexity of certain relationships and some markets that aren't really very developed, that there could still be some places to do that, right? It's just you've really got to search for them. Darren Arden says he doesn't trade ZN much because there are too many professionals in there. He likes to pick off retail. Yeah, so well, because the whole thing is basically like, let's just say, for the sake of argument, right now I can see that ZN and ZF are right where I left them, but ZB is down 2 ticks. So if I have a bid at 119.15, and some retail trader who thinks that momentum is going to come through hits me, which by the way, the spread is up. The spread is steepening right now, as far as I can tell. It flattened, but it is starting to steepen, and so that's why you're seeing the ZB move down, right? So because these aren't moving, but this one is, and it's in line with the way that I think the spreads are, I could maybe justify taking a bid there and saying, I will buy at 15 and pick it back up at 16. Well, it doesn't look like that trade is working because see, I'll just ticked down. Okay. So maybe let's say 13, 14. Okay. Maybe I'll take 14 and I'll take it off at 15, 16. Right. Well, who filled me when I got in there? If these two markets aren't moving on and all of the correlations say that like this move down is like an aberration, then who filled me? It was probably some retail trader that just got too anxious to get in, and they're the one that filled you. Okay, cool. So if I come over here into ZN and I try and do that, am I going to get filled? Probably not. Like, probably as a retail trader, if I get filled, there's a good chance that it could just completely go through me. That's why in ZN, I kind of prefer to use a market order and try and catch the edge. I think that I have a much better chance of kind of getting myself to like a break-even chances if I'm able to catch the edge rather than getting filled, because if I get filled, it almost always goes through in ZN. What I'm saying. So like the kind of setup that you would want to do as Gary, you just wouldn't get filled in ZN. Few will trade in there, but you won't get filled, then it'll go up and you missed it. Now, in this situation, I don't know if that's actually a very good trade because the trend is down, but I had to try and make an example, right? In fact, yep, it went down another tick or two. Not so much in ZN though, but they did get through the iceberg, so I think there's a pretty good chance that we could at least trade the 111. What do you think of market making in micros? Well, that could work. Yeah. You might be able to do it in micros, yes. So I have gone about trying to do some work for that in the micro yield futures. But every way that I go about trying to calculate what a fair value in the 10-year treasury would be, the methods of calculation that I get has a margin of error larger than the current spread. So let me explain it this way. When you look over on the 10-year, when you look over on the 2-year, there is a spread of 10 ticks. Why is that? Well, because if you go on to the exchange that the index that these cash settled futures settle based on, which is BrokerTech, you go onto the BrokerTech where they're trading cash treasuries, and you look at the bid ask yield. Okay, so they're bid offering on price over there, right? But if you looked at what is the corresponding interest rate for the bid and the ask, you will find that they are basically 1 basis point apart. And then you come over here and you look at it, and it's 10 ticks, 1 basis point, yes. So do I have a way to put a bid or an offer that's better than what they are currently offering right here based off of that? No, I don't. So then how do you do it in the 10-year? I don't know. There's these robots have some way of deciding that what the risk is worth, essentially. And I would think that I would still kind of want to know, like, what is the best bid, best offer? What, if this was like these other markets, what would that spread be? And like, are we on the higher end of that spread or the lower end of that spread, right? Those are the sorts of things that you could do in micros. But like I said, like the data is just not enough. And then all on top of that, I can't actually get BrokerTech data, so I wasn't able to make it work. But it seems like there is an opportunity out there. It seems like, there's some firm out there that they happen to get all of the data for those things, and they're like, heck, why not? We want to help the market out, so we'll market make on that small market. Okay. And that's probably how they're doing it. And maybe somebody's lucky, you've got the connections or something, and you're able to get all of the data and everything to make those calculations. That would be great. And I'd be super jealous of you. So there's opportunity for somebody to do it, but you're probably going to need like some unique circumstances to make it work. Yeah? You watched the Red Jacket course, but you didn't really? I really like the Yellow Jacket course that you can take for free. I feel like that anybody that's trading futures should take that. But let's see what Zero Hedge got anything about the new home sales. Pending home sales surged the most since COVID lockdowns in December as rates tumbled. Existing home sales tumbled to record lows in December, but new home sales rebounded, and analysts expect pending home sales to increase modestly in December, but still down on the year. Well, it did increase, spiking a redonkulous 8.3% month over month in December from a downwardly revised spot 3 month over month decline in November. The rebound was not quite enough to turn sales green, ending down 1% year over year. That was the best month over month jump since June of 2020. The housing market is off to a good start this year as consumers benefit from falling mortgage rates and stable home prices. Job additions and income growth will further help with housing affordability, but increased supply will be essential to satisfying all potential demand. And that crazy jump as mortgage rates declined pushed 2023's annual pending home sales index higher than 2022's. The NAR report showed the index of contract signings for existing homes jumped nearly 12% in the South, the biggest U.S. housing market. That was the largest advance since June of 2020. Pending sales also surged 14% in the West and climbed 5.6% in the Midwest. The jump in pending home sales reflects perfectly on the plunge in mortgage rates. The pending home sales report is a leading indicator of existing home sales, given houses typically go under contract a month or two before they're sold. Those sales are expected to increase 13% this year, according to NAR's economic outlook, but as the chart shows, that trend of lower rates has stalled in January. So nothing too big in that one. I kind of think that the market is going to want to get to 111, but that it's going to be a real slog. Like, I bet you that guy wants to get filled, but will they get to him? Like, the further along that this gets, the kind of the more, like, it's like mud. It just starts to become like a bog, you know? The American Defamation League alerts law enforcement to Matt Walsh, Chris Rufo, and libs of TikTok. Wow. Good grief. They're extremists that should be examined by... that's so silly. That is so... Especially Matt Walsh. That's so silly. Matt Walsh is just a really conservative guy that's really triggered about that one specific political issue. And I totally get it. Well... we still got about 35 minutes left. But I would want to think about adding what I just learned to my voting model, but I can do that after the stream. You haven't taken a trade. You only had one trade pre-market GOE, really? With as much as you've been trading, I thought for sure you would have caught some of that trend. This is a tough one. I mean, like, I think that the information that we have, like, overall, like, big picture, suggests that treasuries are a little too high. I think that the PCE data that we got, the knee-jerk reaction is buy treasuries, but then as you read into it, you sell treasuries. Sure. I think the existing home sales report, you sell treasuries, sure. But how much does it net matter? And how much flow are you actually going to get from it? And when we had that like decline initially, like when it was like at like, let's say 10, I think it would have been very easy to say, oh, well, they'll just rotate between 10 and 8. Like, how would you know that there'd be further flow coming through here? That's a really tough call. It's a really tough call. I'm sure that a lot of technical traders that are just always looking for some reason to do something might have been able to convince themselves to do it. But I continue to feel that as an informed trader, it is more difficult than ever to actually be informed. So, where does Utah stand with Texas? I think that they said that they supported what Texas was doing. I honestly, man, this political issue is kind of an interesting one because it sure is explosive, right? Like everybody's out there saying this is how civil war starts and yada yada. Nothing's gonna happen. Nothing's gonna happen. So Biden could do something like take over the National Guard and do all of these things to stop. Can you imagine Joe Biden commandeering the Texas National Guard or whatever in an election year? How badly something like that could play in an election year? Nah. Joe Biden's best call here is to saber rattle a little bit and not do anything and let the courts work it out. Right? So, like most things in politics, it's actually just grandstanding and it doesn't actually affect anything. I mean, if Texas can actually protect their border, then that would be great. But I'm sure that what it really means is that people will just cross over in San Diego, right? So, I can come over here to Reddit and see what they're talking about. How America's economy keeps defying expectations when the rest of the world is struggling. Trump encourages RNC to not declare him the presumptive nominee. Oh, okay, that's interesting. There was a story yesterday that the Republicans were drafting something to say that even though the contest is still going, that Trump is the presumptive nominee, and Trump is saying, no, don't do that. Okay. I think that the Republicans are concerned that Nikki Haley stays in it to the very end and that this becomes a very divisive and negative thing for the party. But I don't think that that's going to happen. I think that she will be so embarrassed by South Carolina and all of her money will dry up. And she'll say, if I want to have any kind of future in this party whatsoever, I should stop. Could be wrong. Could very much be wrong, but Bitcoin reclaims 41,000 after JP Morgan states grayscale BTC sell-off is now behind us. Well, they did have a good run this morning, but I think that the play in Bitcoin is higher. It's just you've got to take the long view on it. It's like there will probably be a gain on the year. Everybody seems to be like way too focused on what was the first week. Like, I don't know if that's really the important thing. If the Texas solves the south border problem on their own, it won't be long until they decide to protect their northern border as well. Well, I'll tell you what, things are very different on the northern border than they are on the southern border, but I don't know if it's really worth getting into. So there was like this, oh my gosh. I know it's super left field, but I'm seeing it on on Reddit what Quake 6 needs to succeed. So there was some Easter egg in something kind of teasing like a Quake 6. And so now everybody's talking about it. I don't know if that's actually like gonna happen, but it's fun to think about. They had a robust single player and then a good multiplayer. Yeah. But a new Quake, that would be great. Okay, let's read this story from CNN, even though it's CNN, okay? Happened again, the U.S. economy defied yet another forecast in big way. Economists were convinced the last quarter of 2023 had to be the one where economic growth slowed significantly after the prior quarter's gangbuster 4.9% annualized growth rate. Gross domestic product, the broadest measure of economic output, did slow last quarter to a 3.3% annualized rate, but make no mistake, as Larry David would say, that's pretty good. It's remarkable. I don't know how Larry David says it, but anyways, it's remarkable given economists were expecting 1.5% annualized GDP growth last quarter. It's even more remarkable considering a year ago they were all but certain there'd be a recession by now and the economy would grow at a meager percent rate. For those big swings and misses, you probably had yourself to thank. That's because consumer spending, which accounts for the bigger part of U.S. GDP, has been relentless even in the face of the highest interest rates in 23 years. Yes, well, that's the sort of thing that tends to drive inflation, right? Is you gave everybody more money. But what's perhaps the most remarkable about the U.S. economic growth rate is how much it towers over similarly sized advanced economies. You know what? I'm losing interest in this story. I don't want to read the whole thing. I just want to you guys. I'm gonna like speed read it and give you the best parts, because a lot of this is just like numbers to fill words on the page. Okay, so one thing they're saying is that the tax rates, the government revenue has been lower, so people have more money, relatively speaking, because of that. Energy prices play a big role in the gap between the U.S. and other countries' economies. That's definitely true as well. And, the fact that there's like there's only one industrial economy, Singapore, that spent more money as a percentage of GDP on COVID stimulus than the U.S. In the U.S., we had a whopping nearly $5 trillion that went out directly to households in the form of a stimulus check, enhanced employment benefits, tax credits, and more of that, combined with the fact that there weren't too many excuses to spend money when everything was basically closed during the pandemic, meant that people had a lot more cash in the bank. When the economy reopened, people were spending like there was no tomorrow. That's been leveling off, but has hardly come to a halt due in large part to all the stimulus money still flowing through the economy, Joseph Gannon, a senior fellow at the Peterson Institute for International Economics who previously worked at the Federal Reserve, told me. Okay, so they're saying it's still stimulus. But if it's still stimulus, like, shouldn't we be way more concerned about inflation than the market seems to be? Although, you know what, today, rates have coming down and the equities are okay. So that's better, I guess. We'd need to see the treasuries come down quite a bit more before I would start to be, those, what do we say, scenarios become interesting. That does make you wonder about the Suez. This is a good comment here on Reddit. They're saying that, well, the U.S. isn't affected by the Suez Canal very much, but parts of Europe could really be. And so I wonder where that's going to go. bunch of other comments from people that clearly have no clue what they're talking about. Do you think that this? Why would you say that the Suez Canal thing is done? They've done strikes on the Houthis. It does not appear to be preventing attacks whatsoever, and shipping companies are still reluctant to take shipping routes through the Red Sea. So I wouldn't say that it's done at all. I kind of feel like it's probably just getting started. And what the eventual impact of that is, hard to say still. But less impact to us than it is to Europe. Although I do kind of suspect, because one of the things is who does it hurt the most is probably China. Because it's the goods coming from India and China that get blocked, essentially. And I think at some point China will start to be like, hey, it's bad. Stop that. So maybe it will blow over. I don't know. You just read that this morning. That okay. Okay. Salesforce is the latest company to cut jobs with 700. Well, that's not very much for Salesforce, so come on. I'm having a hard time deciding if the layoffs that we're constantly hearing about is like a big deal and that if we're going into a recession, or if the news is just for some reason more interested in it than usual. I think that there is some reason to be concerned because it's usually the tech companies that come first, especially semiconductors. When semiconductors are getting hammered really hard, that is like one of the first big signs that you're going into a recession. I wouldn't say that like chip makers are getting hit hard, but like all of the tech companies are doing layoffs. So that is concerning. But I don't think that the amount of layoffs that we're getting is actually that much more significant than normal. And like screams recession per se. Like it feels to me like it does, but when I go in from what I've heard about the data, it kind of says that no. Houthis can say whatever they want. If Iran pulls out, they're done. Well, sure. Half of Biden voters say Israel is committing genocide in Gaza, says poll. There's some guys talking here in Discord, and I'm wondering if Brando is gonna what Brando's gonna say to this guy, because this guy is trying to say like, I want to make $200 a day if possible. So I feel that when you're talking about how much you're going to make a day, that's the sign of being a complete newbie, right? Once you're a little bit more seasoned, you kind of start to realize that like you get what you get. trying to call down on this. Well, let's see what if you're right, then probably we get more information on Monday, right? Wow, Pal World becomes the second game in Steam history to hit more than 2 million concurrent players. Have you guys heard about this whole thing? So, like, this is what's going on in gaming right now. I know, I'm just jumping around. We got 15 minutes left. Once upon a time, the Pokemon community wanted an open world game. And so they said, okay, we'll make an open world game. And it totally sucked. It was just absolutely awful in every sense of the word. And it wasn't really a true open world multiplayer game sort of a thing. So these guys from, I forget where they're from. They're from like somewhere in Eastern Europe. Decided to make their own Pokemon-like game. Because clearly there's so much demand. Such a good business pick. Like, really, that's like such an easy one. Oh, everybody wants, but you can't make, well, we'll just make one that's what everybody wants, but with the different branding. Good idea. So it's like Pokemon with guns. The guys said, well, we wanted to include guns in it because that's what Americans like. Sort of a thing. So you got this game where you enslave pals, I guess. You enslave pals and give them guns and have them shoot each other and crap, okay? So it's really kind of like the whole thing is kind of messed up, I guess, but people want to play Pokemon, and so it is now like the most popular game. Second game in Steam history to hit more than 2 million concurrent players. That is insane. And I kind of want to play it because I feel left out. It's like, oh, there's a new game and everybody's playing it. I want to get in on the new game and get good at it at the very beginning. But then I know that it's like it's an open world multiplayer game sort of a thing where, you know, you're going to spend all your time grinding and all that. I don't want to play that. Give me something that highlights my mechanical Twitch skills. I'd be all over it. Not a fighting game, like a first-person shooter game like that, right? Maybe they'll make a new Quake. Let's see. Oh, you know, we should check Twitter here. Back of the whites into the front of the reds, still creeping back with that part of the stirs curve, continuing to lead repricing of higher yields. Resist the FOMO. Half-Life 3 confirmed. Did you read the thing about, like, the guy released or leaked what his plan for Half-Life 3 was going to be? I think that if they had actually released what it sounded like Half-Life 3 was going to be, it would have been, like, really disappointing. So maybe it's better that they didn't. It's kind of weird. Like, I kind of half suspect that Valve has decided that, like, they actually wouldn't make a very good game anymore, and so they don't really do anything to make new games now. They just make money from Steam. It's just really weird, but like that's the way it's been going. But you know what it is it's the rush to try and catch the casual gamer. Like Fortnite is perfect because it's kind of got an art style that appeals to kids, and if you have no clue what you're doing, you can still run around and build and destroy things and try and find cool gear. And then, of course, when you run into another player, you're going to die immediately. But like the little kids, and I'm talking like 8 to 16-year-olds, like they play it on their console against PC gamers and crap, right? And it's just tons of them do it. So the reason why Fortnite does so well is because it's able to draw on that larger demographic. The games that we knew I'm old now. I'm almost 40. Games that we knew when we were young, they're too hard. You have to get good to enjoy it first. Nobody wants to do that today. And Half-Life was kind of a game like that. I don't think that modern day gamers would enjoy a Half-Life 3 so much. I hear that the latest things that they've done to Fortnite have been really successful and that game is still as bright as ever. They made a new Battle Royale mode that doesn't allow as much building, and because a lot of people disliked the building part. And they're like trying to turn it into a metaverse. So now it's just like everything will go into Fortnite. Fortnite is the metaverse, apparently, supposedly. Yeah, there's a Lego Fortnite now. It's coming. I suspect, maybe not I suspect, maybe it's just my false hope, but Epic took all of their Unreal Tournament games out of other vendors. So like you used to be able to have it on Steam and GOG and all of these. And now there's nowhere that you can get it. So if you want to go and play Unreal Tournament right now, basically the only way to do it is download it illegally on the internet. Essentially, download a cracked version. So why would they do that? Why would they want to like kill the game that like made them? Well, maybe it's because they're gonna put it into Fortnite. Huh? Maybe the next season is gonna be Unreal Tournament and they're gonna introduce Unreal Tournament type. I can hope. And if it happens, then we'll just be an Unreal Tournament stream from that point forward. Not gonna lie, if that happens, it was popular, probably gonna have to try streaming that. Might have to shift things around a little bit. And like, look, if I'm making like, you know, $20,000 a month from streaming Unreal Tournament, then... So you better hope that doesn't happen. I can dream, can't I? That's always what I wanted to do. Or that's what I thought was going to happen. Was that what I thought was going to happen? No. But that was what I... Because at the time, when they were making Unreal Tournament 3... The idea that, like, you would make a YouTube channel about a video game and become, like, a millionaire from it, like Ninja did. Okay, like, Ninja hadn't happened yet. Okay, like, so that was, like, beyond my comprehension that something like that could happen. But that was the way that I was going. Like, that was the kind of content that we were making and stuff like that, right, you know? Did I stutter there? Okay, I guess I stuttered. I'm excited for Microsoft to salvage Blizzard. Well, so did you see though that like they bought Blizzard and then like almost immediately started doing layoffs? Like, what? What is going on over there? Well, probably there's a lot of people that now that they're part of the new company, they don't need anymore. Maybe, I don't know. Like the whole thing is, and this is across the board, Because this is what Riot was saying too, was they said, we're laying people off so that we can focus on our core games. Which I find a little concerning. Like, the thing that bothers me right now is that I'm not really all that into all of the games that are out right now, and I'm waiting for the next thing to see if that's something that I can jump on. Okay, the next big thing is Pal World. No thanks. So like microtransactions in StarCraft, when yes, please. But one of my dreams would be Microsoft starts a StarCraft League in America that's televised on a major network or something. Oh my gosh, that would be so awesome. I still love watching Brood War, man. It's so weird because that was not something that I was ever like, would thought would be like so amazing. But like, I watch like a game of StarCraft almost every day now. Like, I watch Artosis cast a pro game like every day. I love it. And ASL is great. My family hates it because I like to watch it on the TV and they don't want to watch it, but I love it. It's so great. And if Microsoft did stuff to like boost Brood War, oh, that would be so cool. It'd be so cool. Sometimes you realize a bunch of the positions and jobs are also BS jobs doing nothing and make no progress for anything. Know what I mean? That feels like a part of the instant layoffs. Yeah, well, the thing is that because they don't give us a list of what positions they are, there's no way for me to really know or verify that. But I have definitely thought that. Like, I give you an example. I think that a job that can be extremely valuable, but can also be contributing like nothing, is a product manager. Have you ever seen, for you guys that are in tech, have you ever seen that? Like, if you have a good project manager that understands the technology that they're talking about and does a good job, it can make such a big difference for your team because you end up going in good directions and the team becomes better and like it provides more opportunities for you, and like having a good product manager is great. But you can also have a project manager that's just going through the motions and is like a glorified Jira ticket manager. And like the thing that is so weird about it is that like, what's the difference between the two? I can see like the results in terms of like where the team ends up going. I don't think I've ever really had a bad product manager. I think that all of my product managers have been good, but I've seen from other teams when they had a bad project manager and what happened, right? But like, I can't be sitting in meetings and being like, this is project manager isn't very good or anything like that. Like, they probably don't know. I think that almost every project manager sits there most of the time and is like, am I really accomplishing anything, or do I just sit in meetings all day and get paid a ton for basically doing nothing? Right? And so I think that one of the things that happens when you do layoffs is you fire a couple of project managers, and the project managers that are left over just manage multiple teams. I do see that happen. And so to A-Paul's point, there is like this overhead in tech. There's like this huge overhead. Like when it really comes down to it, even among the technical people, there's maybe like one guy amongst all of the technical people that's like really doing all of the work. And everything else is just kind of like going around that and supporting that. And so there's a lot of cruft that there's a lot of room for you to downsize when you need to. Right? I worked as an accountant for 5 years. I was very useful but valuable now. Okay. Accountants can make real bank, man. If you make the right career choices, you can easily be making $500K a year being an accountant. Like if you get your CPA and everything, start your own business, and you really start getting into big amounts. My mom, she doesn't have any kind of like what do you call them, certifications or anything like that, but she helps a guy that does tax accounting. So he's the one that has the certification and owns the business, and he makes tons of money. He makes a lot of money. And you can hire people to do most of the real work too, and then he just has to be the one to make sure that everything's done properly. Good gig. The gig that I do, it's kind of a good gig like that. Though mine is really, really interesting because, like with Twitter, for instance, keeping the site reliability engineers was one of the hard things, and I think that they lost too many of them. Because if you don't have your site reliability engineers and then something goes wrong, and then it's harder for you to get back online, and that like has a direct impact on revenue. So as an SRE, you are closer to the revenue than most other tech people, right? So that's a really big advantage to it. But the thing that I think that's kind of a little bit weird about the SRE role is that if nothing is broken at the time, you know, so you can go through. I tell you what, in October, we had a couple of problems, and I felt awfully important, and we were doing a lot of work. And now here in January, there haven't been very many problems. There haven't been very many problems in January, and I've been working hard on other things, but completely different set of work. So where does that put the SREs on the hierarchy of like who gets laid off? I don't really know. But I don't know if these companies are really doing layoffs because like they're really, really trimming down because there's going to be a recession, and like if something happened and I was to get laid off, it would be like really, really hard to find a job. From what I see from the job market on LinkedIn and everything, it still looks like there's pretty good pickings that like if I really chose to, that I could shift over to a different job within a week. But I don't really know for sure. The market's giving a lot of conflicting signals. But yes, I think there probably is some truth to the idea that like, you know, there's a lot of positions and jobs that aren't really doing anything, and you can lose them without really taking any negative impacts. I think the thing is kind of that like, if you want to grow, you've got to hire people and hire a lot of people to do a lot of things, and there's diminishing returns, but the tech companies know that, and that's part of being competitive is hiring a bunch of people on, and it's not even always those people's fault, right? Like sometimes you just, you know, because of the team and the technologies and all that sort of stuff, you end up being not as effective, and a large part of, I think, the place, like I think part of why I've been able to get where I am is because at my last job, I continually found a way to, or it wasn't even me, I just ended up being in a place that we ended up being valuable over and over again, right? So I think that a lot of my success in technology is luck. Doesn't mean that I did all of the work, but I also got, you know, some lucky breaks that other people didn't. For sure. There's always going to be an element of luck and an element of skill involved in everything. Especially trading. Probably trading more luck, right? Nah. I wish I was more lucky on the trading than I have been. Well, they have retraced a pretty good part of this, so I don't know, 1, 2, 3, 4, 5, 6, 7, 8. When it gets to like 8 ticks counter trend, that's when I kind of start to go like, oh, maybe it was a good idea that it didn't take a trade. You probably bore somebody to death with your rant. Don't sell yourself short. I know. That's what I'm saying. Like, I got to, you see, if we got into a different niche, if I was in a different niche and that niche was super popular at the time, right? Like if Unreal Tournament all of a sudden was a thing and I was streaming Unreal Tournament and then wasn't really going anywhere with it, then that would really be proof conclusive that I'm kind of boring, right? But ultimately, one of the things that I think about myself, and I don't think that this is necessarily a positive or a negative thing, but I think that I tend to be more interested in details and things that tend to bore people. And I think that that's a good thing because that provides opportunities to me that other people miss. But when it comes to interpersonal reactions and being popular, I'm probably never going to be the most popular kid on the block, and I don't have to be. And I probably don't want to be honest with you. Okay, well, that is the sign that it is now after 9 o'clock and I need to get going. So, I'll see you guys on Monday. I'm still going to be a little bit hands-on. One of the things that I haven't really been talking about, but I have been studying a lot for this Series 3 test. All of the tests that I've taken suggest to me that I'll do really well on the test, but I still want to study as hard as possible and, like, ace the test. You know, the funny thing is, like, to me it's excellence. But they don't tell you the score you get. You just know if you pass or not. You don't know what your score is. So I don't actually get to see the fruits of my labor in only that I pass it. But I want to study it as hard as possible. And you know, if I'm going to do something with it, I would understand the law and everything as well as possible. And I do think that it will be an asset to the stream. But it might also allow us to start a business. We could start a commodities trading pool. I could start, you know, like one of these momentum funds that we're talking about where I got like $10 million and so forth. I could do it. I could is a commodities trading pool. Could do it. I wouldn't be able to do a managed futures fund, but that's just another test. That's a smaller test too. So that's next Wednesday. Once we're through with that, I will be turning my attention to some different things. Probably I should make a couple of videos. I've been getting ideas for videos, which probably just means to me that, like, you know, God is giving me the inspiration now that it's time for it. Right. Nobody does it like, well, thank you. I really, you know, that's one of the things that I really appreciate is that I don't think I'm ever going to be like the most popular guy or like, you're going to make a living from YouTube, and maybe I don't want to do that, but I have my little clan here, people that are here every day. You guys work really hard. You understand what you're up against, and you still want to do it, and that's just so amazing and inspiring, and what keeps me going too. So, thank you guys so much. I'll see you next week. Next week's going to be a really important week. What with the Federal Reserve and the volatility is probably underpricing it. So we'll have some fun next week. I'll see you then. In the meantime, stay excellent, team.